Thank you so much for joining us again for another Maine SBDC webinar event. We are the Maine Small Business Development Center, and we are here to help small businesses of Maine in whatever that may look like for them. So my name is Kelsey Reardon, and I'm sure you've gotten several emails from me about this session and others, but today we are very lucky to have one of our special contractors, Kitty Barbee from Barbee Business Services, who is going to be helping us with an accounting webinar to get us ready for filing taxes. It's that time of year again, and so we just want to make sure that you have all of the information that you need to be prepared. And so she's going to go over how some of the funding from this past year is treated a little bit differently, how grants are covered, some record keeping things, and then there will be plenty of time at the end for any questions that you have. In the meantime, feel free to introduce yourself in the chat. Let us know where you're at, maybe what business or industry you're in. If you have a link to your website you'd like to share, please take this opportunity to network with the other business owners here. And all of your questions can be plugged right into the chat as well. We don't have a huge group today. Well, actually, we're getting up there. So we'll see how it goes towards the end for the Q&A section, but we might be able to just have you unmute yourself at that point to ask questions. After this session, you will receive a follow-up email from me that will have a recording to this session, as well as the slides. So if there's anything that you wanted to go back and double check or you missed, you'll be able to do that, as well as all of our contact information. So like I said, introduce yourself in the chat, submit any questions you have there, and otherwise I'll pass it over to Kitty.
All right, well, good morning, everyone, and thank you for joining us on a Thursday. Our topic today is, are you ready for tax day? And I'm going to sort of answer that for you because I think the answer is probably no, and that's why you're here, right? If you're all ready, you probably don't need this webinar. So, but thank you for joining us. Please feel free to throw in questions in the chat box. I'm not going to be watching them, but Kelsey will be monitoring them, and we'll make sure we have plenty of time to address them later. There we go. All right, so my name is Kitty Barbee. I am the owner and founder of a firm in Maine called Barbee Business Services. And I've listed some of my credentials here, but I think the real message for me to you is that I, like you, am a small business owner. I face the same challenges you do every day. You know, so busy in my work that when do I find time to pull all this together for tax season? I might have a little bit of advantage because it is what I do. But believe you me, any question you have, any situation you have, I have probably done it, made a mistake, stubbed my toe up against it as well. But probably the only difference is I actually enjoy taxes. Okay, so and hopefully we've all introduced each other and we all know each other. But if you have a question, throw it in the chat box. Hopefully we'll get to it today. If I don't know it, I'm sure we'll find somebody who can answer your question. Oh, and there it is. There's that big old date that's looming in front of us. You know, we all have it circled on our calendars. We all sort of dread that approaching day, or actually prior to that day. It brings up emotions in all of us. And sometimes that emotion can just sort of paralyze us to not doing anything so that we're scrambling. Yes, exactly. Phyllis, that was a perfect animation. But I'm trying to take away some of that mystique. This is, you know, really fairly basic stuff. And you can always follow up with other questions if you have them as well. We're going to talk today a little bit about the upcoming due dates, right? Some of the very basic items you need when you get ready to prepare your taxes, whether you're doing them or turning them over to somebody. We're going to talk a little bit about very specific Schedule C expenses and a couple that I always like to really pay attention to. Things to watch out for. And then we'll spend some time talking about the PPP loans, grants, any of the sort of special things that happened this year and how they will be treated during this year's tax return. And then just some general, how do you prepare? What can you do better for next year? And again, we'll leave plenty of time for questions and answers. Okay, so here are some of our upcoming deadlines in case anybody is still not aware. March 15th is next week, and that is the initial return if you are a partnership, a C corporation, or an S corp. You actually have to file 2 different returns. The first is really an informational return. It spits out what we call a K1, and then the K1 is what is utilized in preparing your individual return. Anybody here have to do one next week? Raise your hand. Anybody? No? Okay. And then, of course, we have April 15th, which is the official date that's due. And of course, we have extension dates for either of those if you need them. If you need them, you need them. Just get your extension filed now, and then you can breathe a little bit, maybe get some more organization done. I would note that on April 15th, whether you've extended your return or not, you are required to pay what, if you owe money, you are still required to pay that amount, even if your return is not ready to file. So it does not get rid of your obligation to pay any taxes due to the federal government. A basic checklist, some of the things that we are, really need to have in front of us as we get ready to do this, our names, business names, addresses, EIN numbers or social security numbers if you do not have those EIN numbers. And then all of our forms of incomes, that could be W-2 wages, could be 1099 NECs that replaced the 1099 miscellaneous from previous years. NEC is non-employee compensation. It's a new form this year. It looks exactly like the old 1099 miscellaneous. They've just segregated out those 2 forms a little bit. Any gross receipts, whether you may or may not have gotten 1099s or W-2, anything else, any interest income, maybe from a bank. So you want to gather all of those sources. And then separately, you want to have segregated any income amounts from grants you may have received, from the PUAs, from the EIDLs, the PPPs, or your economic stimulus checks. And we'll get into that just a little bit more in a bit. And then your business expenses, right? A list of all those expenses that you've had throughout the year and the amounts, and hopefully, your source documentation you have somewhere, and then maybe a summary of each of those expense items. Payroll information, if you pay payroll or pay a payroll service, you want to make sure you have that. Any new assets that you might have purchased to determine whether or not it's depreciable on your return this year, or if it's depreciated from a previous year. And then vehicle mileage, that's another one. If you travel and need to track your mileage, you want to have that ready to go as well. I thought it'd be nice just to talk about what is a deductible expense straight from the IRS. To be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that is common and accepted in your trade or business. For me and the work I do, that's copy paper or a printer, right? Could be an adding machine. A necessary expense is one that is helpful and appropriate for your trade or business. An expense does not have to be indispensable to be considered necessary. For me, a necessary expense could be a copy of tax code or a copy of some trade journal or something that I refer to. So the IRS is pretty specific about what they consider to be ordinary and necessary expenses. That trip to Cancun might not fall into either one of those categories. I took a snapshot here of an actual Schedule C. So this is sort of the meat of where all of the expenses for your business will go. And it lines them up, lines 8 through 27. And those are the exact categories that they are looking for. So advertising, car and trucks, contract labor, that's when you pay somebody else that is a 1099, depreciation, insurances, interest, legal and professional services. So there they are, all lined up right in a row. The things that do not fit in these categories generally will go under line 27A, other expenses. And that goes on a separate statement where you line item those items out. So if it doesn't fit here, it generally falls under your other category. Here's a tip that I generally try to tell my clients. Whatever bookkeeping system that you're using, it makes sense that you categorize your expenses so they line up with those categories on the Schedule C, right? It just makes it easier. Sometimes I'll get a spreadsheet from a client and they'll have all these items and I'm adding line 7 and line 32 and line 24 to come up with advertising, right? So if you're setting up a bookkeeping system, or if you're reworking your bookkeeping system in 2021, maybe start with the exact categories on that Schedule C, and then it stops you from getting confused when you're actually trying to transpose into that return. Hopefully that makes sense. Here's just 3 things I wanted to sort of take note of because I think they do cause some confusion for business owners. When you're looking at your car and truck expenses, there's really 2 different ways to approach it. The first way is that you are tracking actual expenses, and that means everything from tires to repairs to fuel to I don't know, anything else that is an actual expense. That's one method. The second method is more of a simplified version where you are just tracking your mileage. Okay, you don't get to do both, you get to do one or the other. So you can either track all your mileage or you can track your actual expenses. Now, on either case, you only can deduct that portion which is allocated towards the business. If my vehicle is 90% business and 10% personal, then I only get to deduct 90% of those expenses, whether it's actual or mileage. I don't get to deduct the entire amount. Okay, so that's just something to pay attention to. There are some, and which method you use is really up to you, but I would do, maybe for a year, do a side-by-side comparison and see which one benefits you the most, A, and which one doesn't make you crazy trying to track, right? Because that plays into it as well. There are some fantastic software apps you can get. I actually use something called Mile IQ. It's an app on my phone, and as long as my phone is in my vehicle, it tracks my mileage. And then it comes up and says, was this personal or business? If it's business, I swipe right. If it's personal, I swipe left, and I can get a report on a monthly basis that's ready for my tax return. So no more having to put a log in my car and write where did I go and who did I spend that, where was I headed, and how many miles was it. I just use that very simple app. Now, I would say that I do print that out and I make notes on it. I do make a note that I went to see client A here and client B here, just as good backup record keeping in case I ever need it. That was one of my attempts this year to really get away from all the paper, because I have a tendency to just pile up with paper. Some of these apps can be very beneficial for that purpose. The second one, very similar. If you have a office for your business, you really have 2 methods of deducting those expenses. The first, again, is actual, and the second is simplified. So if we take an example, and my house is 2,000 square feet, and maybe my office is only 20% of that, then I can record all of my expenses, heat, utilities, any of those, and deduct 20% of those for my office expense. Very similar to the car truck expense, where you're tracking your actual expenses and then applying a percentage against it. The other method, which is fairly new, the simplified method, is you take your square footage of your office space and you multiply it by $5, and that's your deduction. Okay, so again, how much tracking and which one really benefits you the most. If you do the home office deduction, the IRS is pretty strict about the restrictions around that. My office is really an office. It is only used for my business, and it must be 100% used for business. There can't be a couch and a TV and a refrigerator here for Friday night football. They would not say then that is truly a dedicated office. So each one of these has a few restrictions that you want to pay attention to.
Kitty, can
Yes.
you repeat I believe the breakdown of the comparison, Liz, if you want to unmute yourself and clarify the question.
Yes. Yep. Go ahead.
Maybe I can ask to unmute you.
Could you just repeat that? You said the square footage divided by $5 or multiplied by $5?
Yep. So yes. So if your office is 100 square feet, then your deduction would be $500. Yep. And that's just, again, simplified version. And I would again say, do the math for a year for both. See which one benefits you the most, and see which one drives you crazy trying to track all of that, right? And figure out which method you'd like to use. And then finally, travels and meals. And I'm really talking about meals here. Only 50% of meals is a deductible expense. If you're going to deduct that expense, then you really need to document that very well. So for example, if Kelsey and I go have a business meeting, I need to put on that receipt, you know, a meeting to discuss new client, right? Or a meeting to discuss office protocol. Okay, they want to know who was with you, what the discussion was, and really document that it was a business expense. Taking you and the kids all out to, you know, Ruby Tuesdays, you might have a hard time justifying that. There is a new regulation in place this year that meals will be 100% deductible versus 50% for 2021. So go out more. When we can, go out more. I think it's only going to be a 1 year, and it was the way of the previous administration trying to encourage businesses to get out there more, and this was their way of doing that. So those are 3 ones that I typically like to mention, just because I think there is some confusion about I get to do mileage and I get to do expenses, or how do I do my home office? And now they've offered a simplified version. Okay, and just another tip, mileage did go down this year from last year. It went down from 58 cents a mile to 57.5 cents this year. So don't automatically plug in that 58 cents. You've lost a half a cent this year. Okay, so here are some of those special things that we probably all have dealt with, either 1 or 2 of these this year. The first one is the PPP loan. For any of you that received it, it was provided by local banks and guaranteed by the SBA under the CARES Act. The proceeds from a loan, they must have been used for very specific purposes, including payroll and costs related to healthcare benefits, insurance premiums, salaries, commissions, interest on mortgage obligations, rent, and interest on debt that was incurred before you received it. Excuse me. These loans are forgivable if the borrower met all of the requirements and applied for forgiveness. As of February, Maine taxpayers will be able to exclude the forgiven portion of a PP loan from federal taxable income and deduct the eligible expenses paid with loan proceeds, unless your PPP loan was $1 million or more. So let me just say that again. The federal government had already determined that you do not have to include that as taxable income, and that you could still deduct the expenses it paid for. So sort of a double benefit there. The state of Maine was trying to figure it all out, but finally in February, they said, okay, unless your PPP loan was more than $1 million, we're going to follow the same guidelines. So you do not have to include it as taxable income. So when you go to your tax preparer, I would put your basic income, and then I would list this other stuff, PPP loan if it's been forgiven, and to ensure that they do not include that in that amount. Hopefully that makes sense. The EIDL, the Economic Injury Disaster Loan and Advances. So that again was designed to provide relief to businesses that were experiencing losses due to the revenue due to COVID-19 when it first began. And the SBA decided to limit that, an advance that they gave you, to $1,000 per employee up to a maximum of $10,000. So if you received an EIDL loan, then you also received an advance they gave you. okay? Anywhere between $1,000 and $10,000. The terms of these loans were 3 3/4% interest, depending on whether you were a business or nonprofit, 30-year payment plan, and no prepayment penalties or fees. The loan portion is simply a loan, treated like any other loan. But the advance that you received, it is not taxable income. So that's another great benefit at tax season. You do not have to include that in your taxable income. Economic stimulus checks, that's coming up a lot in my business. Everybody should have received two, one way back in April, right? $1,200 plus $600 per child. And then the second one was $600. You might have received that one in December, maybe early January, but it is still included in 2020 numbers, not 2021 numbers. If you earned more than $75,000 per individual, they started to prorate that number down. So if you did not get all of the full amount, that could be why. And again, not included in your taxable income for 2020. But you need to have that information when you prepare your return, because if for some reason you did not receive all of your monies, then there is a recovery credit that you file with your tax return. Excuse me. So for example, I had a client who did not get all of their first stimulus check because they owed some back child support. Let's just say it was $600 of the $1,200. They then can report that and get a credit, tax credit for the remaining $600. And even if you made more than the $75,000 and they prorate it, they'll give you they will give you a credit for that amount as well. So that does benefit you. So you want to make sure you have that information on hand. If for some reason you don't remember or don't know exactly what you received, you can get on the IRS website, irs.gov, type in economic stimulus checks, and it'll walk you through a questionnaire that will help you come up with the amount that you actually did receive. State and other small business grants. In general, a grant is included in taxable income, but there are some exceptions. There are some grants that are not. So really you need to work with the granting agency to determine whether or not yours is taxable. If they sent you a 1099, it's taxable. Okay, if they didn't, then maybe you want to pick up the phone and have a conversation just to determine that. Some do, but in general, the rule is they are included. The PUA, that was the unemployment for small business owners. That is taxable income, just as any regular unemployment income is. And when you signed up, you would have had the opportunity to say, I want taxes withdrawn or not. And again, you would have received something from the state of Maine saying how much and how much taxes were withdrawn, but that would be included in your income. All right, so now I guess I'm talking about how do you prepare, how do you pull everything together, just some basic guidelines that you want to pay attention to. Getting organized, right? Getting everything separated. Here's my invoices, here's my expenses, my bank statements, cash receipts, which we all can miss, mileage, putting together all of that information and try to categorize it so it's together. When you have your taxes done, you're not required to turn in every one of those receipts, but you are required to give them a summary of that. And then they're going to ask you, can you document and prove all of this? To which you answer yes, but you don't have to physically take every single receipt into your tax preparer. I love it when I get a nice summary sheet. There's all my mileage, there's all my office expenses, etc. Reconcile. Whether you have a software system like QuickBooks or you're doing this manually with your own bookkeeping system, it's really important that you reconcile every month and then the year to make sure that you've caught everything. Review last year's return. That's always a good idea. Make sure you haven't forgotten something. Stuff can slip by. Oh yeah, that's right, I forgot, we always got this, right? So it's always good to just kind of take out last year's return and then do a sort of a side-by-side comparison. You might be able to see like, why were my expenses so much higher last year, and realize you've forgotten something. Making sure your payroll information is ready to go. If you have payroll or use a payroll company, they'll give you your year-end reports. but make sure you have all of that information. And then of course, making sure you book early enough with your accountant or tax preparer so that they have time to get it done, which I'm saying is now. And it's probably filling up pretty quickly at this point. Then I made a note on the bottom that I'm sure you all know is you're required to keep all supporting documents for a minimum of 3 years from the date you file your return. And there are also some special credits that require longer than that. I think there's different ways. You can keep paper, right? You can store it in a box and file it, and every 3 years start to take the oldest return and get rid of it if you don't want to save it. You can save it digitally. You can scan documents and save them on your desktop, or you can actually share something to the cloud and save it there. And then you don't have to hang on to all of that paper. That's the number. That's how many days we have left from today. 36, I think, if my math is right. I hope my math is right. So I think if you haven't started, it really is time to get started. It doesn't have to be overwhelming. If it's a task you really dread, do it in small chunks, right? Say, I'm going to spend 2 hours getting ready for taxes today, and then I'm going to go reward myself, right? Don't think you have to sit with 8 hours and something that you absolutely hate to do. Just do it in small chunks, break it out. All right, just kind of, you know what they say, if you're going to swallow an elephant, you do it one bite at a time. Same idea. All right, that is it.
That was great.
All right. Now, questions.
Yeah, thank you. So we've got a couple questions, which I think is interesting because it's a lot of business advisors who are here and excited to have you as a resource. So Allison was wondering, how many $/miles can you deduct? Does it change each year?
The number of miles does not change, but the cents per mile can go up and down. And that's what we're seeing this year.
Okay, that makes sense. And then is the stimulus and the EIDLs, are they taxable in the state?
So no, they are not. That's a simple answer. There's been a lot of back and forth about how each was going to be treated, because of course, any time that the state does not tax income, they then have a revenue shortfall, which is why it's taken them so long to kind of determine what is it we need to do. But they determined unless you hit a significant amount that they were not going to tax that.
Can you deduct the cost of tax software if you buy it specifically to file for your business?
You can deduct that just the same as you would deduct hiring somebody to prepare your taxes for you.
That makes sense. Those are the only specific questions that seem to have submitted. So Phyllis is welcome to unmute herself if she'd like.
Great. I'm working on it. Just this week, they passed the stimulus bill. And my understanding is part of that was that unemployment and like the PUA in 2020 was going to be not taxable on fed and state level. Is that still true? Is that true?
I want you to say that one more time, Phyllis.
Okay. Okay. As part of the stimulus package, unemployment and the PUA and other federal unemployment income was going to be not taxable. Is that true? Isn't that true?
I can't answer that question. I mean, number one, that still isn't signed into law. That would be my first statement, right?
Okay.
Has not been signed by the president. And number two.
Oh, yes.
Right, this is a new
That's
one.
tomorrow, I think.
Yes. And I don't know how they would go back and retroactively do that when people have already filed their return. But having said that, I have not dug into that detail by detail. So my answer is I don't really know. I'm giving you my gut sense is I would not count on that.
There is an AFL-CIO unemployment Facebook page, and they have been saying for a couple of weeks that when that was signed, if you had already paid your taxes on your unemployment, you claim a refund.
Interesting. Interesting.
Yep.
It's sort of the wild, wild west of taxes.
Yes.
Now.
Yes.
So there is
It's
a
been a
lot
wild,
going
wild
on.
west all over the country for a whole year now.
That's right. That's right.
Yes.
So I guess I'm not going to be surprised, but I'll have to wait and see if that comes out. That'd be another bit of good news. And I think everybody needs the advantages they can get this year.
Yes. Yes.
Thank you for that question. We've actually, we've talked about that in a lot of business advisor meetings of like, what is going to happen with this? Because we don't know. And sometimes that's not the answer that people are looking for, but unfortunately, that is the answer.
There's also rumors on the street that they're going to extend the tax deadline again in June. No answer yet. I wouldn't count on it, but it could happen again this year.
Yeah. So Allison made a good point. Facebook speculation about any COVID relief can be super misleading. People love to speak with absolute certainty when they really don't know. So always use caution.
Right.
Yeah.
Thanks for that question. So we have another one asking, do inn owners need specific advice?
You know, I'm trying to think of anything that might be specific. Quite honestly, I don't work with one single client who is an inn owner. So off the top of my mind, I cannot think of anything. You know, you're gonna obviously have a building that you're gonna be dealing with as well, right? So you have that as well. Sorry, I can't give you anything any more specific than that off the top of my head.
Well, we happen to have business advisor Tina Oddleifson in the call right now, and she owned an inn, so she might be able to answer that question in the chat. But also, I'm not going to put that pressure on her if she wasn't paying close enough attention to hear the question. So we could follow up on that.
Not really sure that.
So Tina, they were asking, do inn owners need any specific advice for filing taxes?
I don't think it would be based on the industry so much as more your type of your business entity.
Right.
Okay. Well, thank you for clarifying. See, what a team. We have another question. Trisha's saying, I am self-employed and I have read that we must have 1099s for all our work. What happens if a major client does not send one?
That happens all the time. It happens to me all the time. So generally, I use QuickBooks. So I'll have my list of clients and I'll be checking them off as the 1099 NECs come in. And then I will call them up and I'll say, are you planning on sending one? And the answer was, oh, I didn't know I had to, but they're still included in my income. They fall in that unknown, that's not W-2 and it's not 1099 miscellaneous. So the totals still get added in. The only concern is if you didn't get a copy and they sent one, you do need to make sure that your numbers line up. Okay, and that's why I do that double check with my customers and say, are you sending me a 1099? Because if my records say they paid me $2,000 and then they sent one and I never got a copy of it that said they paid me $2,300, then there's a discrepancy there. So I just do the follow-up, ask them if they're going to do it, but my records or my software is going to pull exactly what they have paid me for the year.
That makes a lot of sense. So you want to make sure that your records are accurate. And then if there are discrepancies with what you're getting from other people, you want to follow up in case there are further discrepancies that you might have missed. We have a couple more questions, so everyone's getting excited now. Liz says, I'm in the process of setting up a new accounting software. Your hints of creating categories equal to Schedule C categories was so helpful and timely. So that's just a compliment, not a question. Good job. Jim says, I received a couple of small grants late 2020. Once I received a 1099 and the others, one I received a 1099 and the others I did not. I have reached out several times and no answer. My accountant said to claim it in 2021 if I get a 1099, or I could claim it as non-taxable income in 2020. he was researching. What are your thoughts? That's a long question.
I think I would say that whatever you do, document it very well. Just be straightforward, upfront, and document it. This is what I did, and this is why I did it. And I find it interesting about how many small businesses, that 1099 thing, it has deadlines just like everybody else, and there's fines associated with not producing those 1099s, but there are so many people who never bother. So I think that's unfortunate, but my only advice, Jim, would be just whatever you and your accountant decide to do, just document it. You know, here's what I did, here's why I did it. And then if it comes up, if a good comes up, you have good documentation. You're not showing ill intent to defraud the government.
That makes sense. Trisha just followed up to say last year the major client who did not send one refused to send one when asked. And you just said there are fines for that?
Yeah, the later you submit those, there are some fines. And I often wonder what their thinking might be, but that's also a deductible expense for them. So you can either draw your own conclusions about why they're not sending them. I don't know, you know, and like anything else, there's software that makes doing that so easy if you've kept good records, right? I literally can get a 1099 done in under 5 minutes. They're that simple to do. So yeah, I don't know.
Yeah, I mean, we're all just doing our best trying to support each other. So again, we're assuming not ill intent, but we want to be thorough and follow up and
do your due
advocate for
diligence,
ourselves.
right?
Exactly.
Check in with them, you know, you can make a note of it, and then you're using your records for what that income was.
Mm-hmm. Yep. And your records are going to be key to all of this.
Yeah.
So. Well, there aren't any other questions in the chat. If you have any other questions, please drop them in there or feel free to unmute yourself. We've sort of pared down the group a bit. But I think that this was fantastic and very helpful for both clients and advisors. If you had one takeaway for everyone that like this afternoon, what should everyone in this call do? What would you say that one thing is?
2020 is almost behind us, right? 2021 is a new year, and it's a great opportunity to start over, to improve, to change things up, to figure out a bookkeeping system that might or might not be an actual software, but a bookkeeping system that helps you, right? Number one, that helps you organize all of your records, that helps you keep good records in a way that isn't overly burdensome to you, but also makes this end-of-year process so much easier and maybe a few less headaches. So now's the time, right? And there's a lot of different options, from a general ledger account to a very simple software, you know, so it doesn't all have to be some expensive software that you don't want to deal with. Okay, it just has to be organized. And here's the add-on, because I won't say number two, is it's really, really crucial that every small business owner takes time on a regular basis to work on their business. Every day we earn money by working in our business, doing the things we do, right? Bookkeeping for me, right? Plumbing for somebody, someone's an artist or a cook. That's what you do to make your money. But it's so important that you step back and work on your business. And that means all those other things. For me, that means I carve out time every Thursday afternoon to open up my QuickBooks, enter my bills, pay my invoices, run my reports, and look at how my business is doing and make decisions from there. And it's not 5 hours, it's 2 hours every week to help me stay up on it and to not let it run me over, okay? And then it makes this whole process that much easier. So that's my one piece of advice. 2021 is a new year.
Yeah, that proactive approach is going to help you short-term and long-term and all around. So I agree. Trisha had another question. She raised her hand. Would Trisha like to unmute herself? Maybe. Maybe not. We'll let her come back.
Okay. So can I add a number two?
Sure.
Hi, can you hear me?
Yeah, we can now.
Go ahead, Tricia.
I was trying, I've never done this on my iPad before, so I'm trying to figure out how to
You got
work
it.
I actually have a few questions, if you don't mind. I didn't want to type them all out, but one is with the income with COVID last year, my business actually took a nosedive. And so I have my business up until August, and then the main client, and then other clients throughout, and then unemployment. And then I started doing work, which is under the table, I guess. I will file taxes on it. But I don't know how to do this because it's not at all related to my normal work or, the work I do. And so do I have to do something different to claim that? Or I just put it in all my income and I have all my paychecks? If anybody asks, I have them all.
Yep. So no, that's a great question, Tricia. And it comes up a lot. So, this is a good example where your business is generating a certain amount of income, and that's your Schedule C. That's where you're going to report your Schedule C income and your business expenses. That's going to come up to a net figure. That's what rolls over to what I'm going to call the front page of the 1040. And then it's also going to ask the front page, we've left the business behind. It's going to ask for W-2 wages as well. Okay. So those are paychecks and taxes that are taken from there. And then there is a miscellaneous where what you call the under the table income would be reported there. So the return is going to be a conglomeration of business income and expenses, W-2 wages, and then an other.
Okay. It's complicated. I don't know how to deal with all this because it's like, because of this, I didn't make much money from my my actual business this year. And my other question that I don't understand is I had somebody do my taxes the last few years who retired, and he told me his last words were that this year I have actually two businesses, and he, I guess, rolled them together because one I'm not actually making money from yet. I've been working on setting up my studio and getting things done and working with a business advisor. And so I claimed the last 2 years or 3 years, I think 2 years, my expenses from that. I've just treated it as one business. And he said this year, and I didn't quite understand what he was talking about, I couldn't do that. And so I'm not sure what that means and what to do.
Okay. And I never want to second guess what someone else is telling you. So I'm going to give you my best. Here's what I think he means. But I think what he's saying is that those two businesses are defined enough that there's going to be 2 Schedule Cs. Okay. And it's fine. You can have 10 Schedule Cs on your tax return. Okay. And I literally have clients that have 5 or 6. And so the name of business A will have its own Schedule C, and then the name of business B will have its own Schedule C. So the hope is that you have it separated enough that you can identify the individual income and the individual expenses for each of those, but it all still goes on one return. Okay.
Well, the business B, I have no income from it yet because COVID tanked it and my grant money didn't come until this year. And so can I just keep it the way it has been? I mean, I have it, in my accounting, I guess you could say, which is, I did some spreadsheets for him last year. I have them, separate and all the expenses separate, but he's just rolled them together under, my one income.
Again, I'm not sure why you don't want to separate them, but that business B that only has expenses is going to show a loss, and that's going to help you. You don't necessarily have to have, especially as a startup, you don't have to show income in order to deduct expenses. So
that was my fear, because I have no income. I'm not actually producing yet. I'm just finished setting up the business.
Right. That expense, that negative, it's going to show your business has a net loss, and that's going to lower your entire income bucket, which is going to benefit you.
Okay. And then if you don't mind, have one more, I hope, quick question, which is about office space in the house, or for me, it's a studio / office for the two businesses. My house, I live in an apartment, and it's a large, like a studio apartment. And I have one area that's designated, and it's very clearly only office studio, nothing else happens there. Can I still claim that as office space, even though it's not a separate room?
I think what you're saying, does it have to have walls? It does not have
Okay.
to have walls. Just measure your space.
Okay.
And as you said, it is dedicated office space.
Okay. Okay, great. Thank you so much. I really appreciate your time and your help on this workshop.
Absolutely.
That was
I was going to say my second thought, and I often forget to say that if there's one other thing you can do to help your business is please get your personal separated from your business. Okay, if you are managing all of that in one account, make 2021 the time that you separate that out and have a very, you have a separate business account for all of your business transactions and a separate account for your personal one. That can cause so many headaches and so much confusion and just intermingling. It's not a good practice for a business owner. It's one of those things where you have to start a habit early on and really be diligent about that. So that would be my second piece of advice.
And I've heard that before, so it is helpful enough that as someone who that doesn't apply to anything I'm talking about, I even knew that. So this was so helpful, Kitty. Thank you so much. Everyone, we are in a very specifically exciting position to have Kitty as a special contractor with the Maine SBDC right now. So if you are registering or requesting advising with one of our business advisors, they have access to Kitty and she is able to join some of those meetings. So there is limited availability. So if you would like more information, definitely request advising on our website or follow up with your business advisor and let them know that you came to this webinar, that it was wonderful, and that you would love some more additional tax help, because we want to make sure that everyone has access to this information. So if you have not checked out our website, mainsbdc.org, I'm almost sure, there is a bright orange box in the upper right corner that says request advising. Yes, it's org. I was right. And that is the easiest way to get in contact with a business advisor who will be able to offer you one-on-one or one-on-one plus an advice, special contractor, but also free advice. So all of our resources are free. We are upgrading our webinars, we are upgrading our e-courses, we are really trying to answer every question that you could possibly have. So be sure to follow up. I will also follow up with all of you after this with an email that has the recording to this session and the slides and some contact information. So that request button will be in that email. And otherwise, thank you again, Kitty. This was wonderful.
Well, I hope it was a little bit useful. Even if you took one little nugget away from it, then it was well worth it. And I wish you all luck in 2021. It's going to be a great year.
Yeah. All right. Thank you, everyone. Have a great day.